Currencies on Forex market are always traded in pairs. In order to find out the relative value of one currency, you need another currency to compare. When you buy one currency, you automatically sell another currency. Currency pairs on Forex are given in abbreviations. For instance, Euro-USD stands for the Euro versus the US dollar, and USD-JPY stands for the US dollar versus the Japanese yen. If you buy Euro-USD, you are buying the euros and selling dollars. If you sell Euro-USD, you are selling euros and buying dollars. The first currency in the pair is called the base currency, while the second one is called the quote currency. Price of the base currency is always calculated in the units of the quote currency. For example, the exchange rate of the euro-dollar pair is 1.10. It means that the 1 euro costs $1.10. It's usual to break the currency pairs into majors, crosses and exotic pairs. All the major pairs include the US dollar and are very popular among the traders. They are Euro-USD, GBP-USD, dollar-yen, dollar-franc, Australian dollar-US dollar and some other pairs. Crosses consist of two popular currencies but do not include the US dollar. The most common crosses include Euro, Yen and British Pound. They are Euro-GBP, Euro-JPY, GBP-JPY, Euro-Australian dollar and others. Exotic currency pairs consist of one major currency and one currency representing the developing economy like Brazil, Mexico or India, or one small economy like Sweden or Norway. Exotics are rarely traded on Forex and usually have less attractive trading conditions. In addition to currency pairs, you can also trade metals and CFDs. I'll contrast for difference. The CFD instrument is an easy way to trade indices, shares and other assets without physically owning them or paying for them.
Stay tuned for other titles in this series. They're on the way.